BNP Paribas Hans-Guenter Redeker joins us live now. Thank you very much for speaking to us. And I just want to start by asking you, picking up on what we were hearing there about the threat of deflation to the global economy, despite central banks flooding the system with cash to stimulate growth. Are these measures working?
Well, I guess that there is a deflationary risk in the system, and when you have a highly leveraged economy, you should never do the mistake and assume that high leverage is going to work as inflation. It is going to come out as deflation. You have, as a result of that, a sharp decline in monetary velocity, and I guess that is the theme which you will find in the G4, and central banks have to act accordingly. So when central banks are buying bonds, when they are going into quantitative easing, then that is a reflection of this decline in monetary policy. They have a velocity. They have to ensure that narrow money supply growth is growing at an exceptional pace to compensate for the decline in monetary velocity. Now, what does it tell us for the exchange rate? Now, when you have broad money supply not growing, when you have credit not growing, and you're pumping liquidity into the systems, then obviously you give a very clear signal that you wanted to have a lower exchange rate, and that is currently working out. So that basically implies that within the G4, within the industrialized nations there where monetary policy is, or the velocity is not really working.
Hans, let me ask you about that European Central Bank's meeting today. What are your expectations?
Well, the expectations are in both cases that there are not any rate hikes to come, but you have to look at the ECB press conference, and there we have further information to see concerning the assessment of growth, the assessment of inflation, and on top of that, Mr. Redeker is very likely to make a statement concerning the bank's stress test, and is obviously trying to provide a kind of public relation type of speech here in making sure that people are getting more supportive on the issue.
Do you think that the stress test will help to calm investor nerves, perhaps restore some degree of confidence in Europe's banks, or is there a danger that it will underestimate the bank's exposures to Greek, Spanish, Portuguese bonds?
I guess that this is a real danger. So that means that we need to have a very transparent stress test. And when you have a methodology which people do not believe in, then you have a situation which is going to be back like in May. So that means at that time we do not see banks trusting each other, and the result of that had been a money market distortion. And money market distortion can come back very quickly in the case of this stress test opportunity not being used in a very transparent way.
And are we likely to see the European Central Bank buy more government bonds to support the region's economy?
I hope so. I assume that we are running out of fiscal options. We need to use as a monetary policy option, and as we were noting before, there is no inflation risk here, and that inflation risk is not there for a couple of years. Central banks and a lot of other people know how to fight inflation, but you have no idea how to fight deflation, and therefore we have an asymmetric risk situation in the system.
Appreciate your thoughts, your analysis. Hans-Guenter Redeker, Global Head of Foreign Exchange Strategy at BNP Paribas. Thanks very much.